that's a wrap for the trading day. There you have it, the sound of the closing bell. That is the New York Stock Exchange there. The Dow Jones Industrial Average went back and forth today, but finished with about 200 points gain.
The Nasdaq and S&P 500 closed with modest gains. For more, let's bring in Anastasia Amoroso. She is a chief investment strategist at iCapital.
Hi, Anastasia. Thank you so much for joining us. So we saw a fourth straight day of gains on Wall Street. What's driving the market today?
Well, I think it's everything that it wasn't driving the market in January. And the biggest thing here is that you have buyers that are coming back because the earnings growth is coming through. So that's really what we've seen today and in the last few days as well, is that you have earnings from some of the tech giants and the communication services giants. They're really topping expectations, and also guidance is supportive as well. And you see this across the tech space. So that's really been the biggest driver here. But the other thing that I would say, the dynamics that we saw in the markets in January were really pretty brutal in terms of there's not been a big buyer in the market, which is typically the corporates stepping in and buying back those shares. Those corporates have been absent because they were in the blackout windows due to their upcoming earnings seasons. But at the same time, you saw a wave of selling pressure from everybody from hedge funds to retail investors to money managers and more. So the market was out of balance when it comes to buyers and sellers. But I think what investors are doing right now is they're surveying the damage after the reset that we had in January. And they're saying, look, we have much better valuations and the positioning is a lot cleaner. A lot of selling has already been done. And at the same time, you've got the fundamentals that are really not nearly as bad as feared. And the Fed is, by the way, out of the market. That we're not going to hear from them for the most part until the March FOMC meeting. So I think this creates a window of opportunity, for investors to pick their favorite spots. And those favorite spots are clearly in some of the technology names.
Anastasia, tech sector performance is expected to rebound this month. Where should we expect to see some of that resurgence?
Yeah, I think it's a really important question because I don't think it's going to be a uniform resurgence across the tech space. For example, a lot of the pandemic trades, I think those have played out. And hopefully this is a year we're going to inch out of the pandemic and into the endemic state. So it's not going to be about the digital native stay-at-home type tech plays, but it's going to be about the trends that are still going to grow even if the economy slows on the margin. So think about cloud computing, for example. A sliver of the IT budgets today are spent on cloud today, but that percentage is going to grow significantly to the tune of 40% of the budgets being spent on a cloud adoption, for example. So that's clearly going to benefit the cloud names, but also the whole ecosystem that comes with the cloud, such as cloud cybersecurity. And that brings me to another space in technology, which again is the broader sphere of cyber. And there's so much to do there. There's so many more endpoints to protect. There's so much privileged data to secure as well. So I really like the cybersecurity space within technology, and then just the software broadly. If you look at the IT spending this year, it's projected to grow by 5%, but the enterprise software spend is supposed to be double that. So I would very much be looking to some of the software stocks within tech. And the last thing I'll mention, there's a lot to do in tech, is the semiconductor space. It has been pretty beaten up, and maybe it's not going to be quite as strong of a year for semis, but some of the same semiconductors that are tied to those trends of cloud, for example, or the metaverse, or the adoption of 5G in the smartphones, I would expect that tech to do well as well.
So, Anastasia, clearly tech is something that you're excited about, but let's put tech aside for just a second. What other sectors should we be watching over the course of the month as the markets look to rebound?
I think there's a couple of other interesting things to watch is energy. And of course, maybe we're not going to be talking about as much of a rebound in energy, given how well energy has done year to date. But I would suggest to investors that it's definitely not the time to give up on energy just yet, because we've heard from OPEC today, but OPEC is likely not going to deliver the production increases that they say they're going to deliver. Our data suggests that they've been undershooting that by quite a bit. So we're still likely to be in the environment of elevated oil prices. And against that backdrop, some of the energy companies tend to do quite well. If you look at the U.S. shale oil and gas, the break-evens for that are $40 or $50 a barrel. At close to $90 in a barrel of crude oil, they're making very significant cash flow, which, by the way, they're returning to shareholders increasingly through share buybacks, through dividends, and not so much CapEx. So that's a sector that I still expect to be quite supported here. And the other one I will mention is the travel reopening trade. Clearly, travel had to pause amidst the Omicron surge, but we're now on the other side of that. And many group bookings are going forward. Many international trips are going forward. So I think we're going to see a very strong business travel rebound come spring. So I would still be looking for some of those reopening trades and in sectors like airlines, for example.
I know lots of friends who are planning trips, so that'll probably bear out. Anastasia Amoroso, thank you so much for joining us. We appreciate your insight.
Thanks so much for having me.